from London. Welcome to the RANsquawk European morning briefing for today, Tuesday the 6th of September. All eyes has been on Switzerland in the European session. The Swiss National Bank announcing a Euro-Swiss peg of 1.2. We saw an initial high of Euro-Swiss of a gain of 1,000 pips on the session. Similar story across all the Swiss-related pairs. There was a general a big increase in risk appetite across all the European asset classes. Equities trading towards their highs, some pressure coming into fixed income. The energy complex also boosted across the board as the dollar index initially spiked down around 0.8% on the session. The Swiss market index still currently trading up towards its highs of a gain of around 5% on the day. The big gainers there on the breakdown, UBS and Credit Suisse, the Swiss banks. Looking elsewhere overnight in some general risk-averse tone following the market collapse yesterday, the spot gold did trade at a new record high at 19.20 an ounce. So just keep an eye on that. However, given the increase in risk appetite across the European session, it has come back below the $1,900 an ounce level. Looking elsewhere, a lot of focus has been on Italy following the fallout yesterday on the markets, with the Italian spread gaining yesterday 40 basis points against bunds. However, trading down today around 13 basis points as there's been some initial speculation that the ECB is currently back reactivating the securities market programme. We have seen the Italian 10-year cash yield also fall back below the 5.5% mark. Looking elsewhere then, the German factory orders data showing some weaker data coming in lower than expected on both the month-on-month and the year-on-year figure. However, markets generally have been buoyed by the Swiss National Bank announcement earlier on. Looking towards the US session then, there's been some interesting articles in the FT this morning here in London saying that US banks have been offered a deal by state prosecutors saying that potential legal ramifications of its mortgage-backed security lawsuit could be somewhat removed if they settle in a multi-million-dollar lawsuit. So there's potential there for some relief for the US banks on the back of that. In terms of the US session later on, only looking out for the US ISM non-manufacturing composite, the only data out of the US really, and later on another Fed's outright Treasury coupon purchase. But that's enough from me. Have yourselves a great trading day.